So afternoon, everyone. Thank you for joining this session with Magenta. We've got Lucy and George from Magenta on the call, so they're going to run the presentation with you. If you do have any questions throughout, do shout them out or put them in the chat and I'll ask them for you. And I'll make sure I share the presentation and Lucy and George kind of details after the call as well. Okay, so over to you, Lucy.
Lovely, thanks guys. So yeah, hiya, and thanks everybody for attending the webinar today. Hopefully everybody finds it useful. Obviously the topic today is how to identify a non-standard property risk. So I think let's sort of get cracking. So yeah, thank you all for attending. Just want to first of all say hi. Hope you find it all useful. Like I said, Jordan's on hand to answer any questions throughout via the chat. Alternatively as well, there is a Q&A at the end, so if you need to ask anything, feel free. Just to give you a little bit of background as well, for those of you that don't know who we are the approved BEBA escape of water and distressed risk scheme providers. And what we mean by distressed risk is obviously non-standard property insurance, and that's residential. Our solution helps our brokers access the insurance that the clients can't otherwise find, you know, due to escape of water or other distressed properties in the home. Just touching base really on the BEBA scheme approved panel that we're on. You know, for those of you that don't know, I mean, escape of water is the largest peril in property insurance. You know, the scale, severity of the exposure to insurers is on an unprecedented scale, so much so that basically not many would insure the peril if the clients had a significant escape of water. Therefore, we've obviously teamed up with BEBA to be a partner, and we're able to offer clients a solution this. And what we're doing is we're basically working proactively. We're working hand in glove with a mitigation and preventative solution to tackle the issue. And I mean, it costs our industry roughly about 2.5 million a day in claims. Obviously, you've then got the distress, the inconvenience to homeowners. But yeah, our scheme basically looks to prevent this. We work alongside a company called Geo, and they've got a piece of technology called Waterlock, which was designed to reduce the risk, you know, the hassle and expense of any water damage claims for the insurance industry. And it basically just reduces escape of water losses by detecting any standing water, excess humidity and freezing conditions. Unlike a lot of other systems, it doesn't only detect the water, but it also offers the ability to instantly shut off at the mains. So if the clients aren't there, they can do it via an app as well. So if they're away and a leak's detected, it will basically kick in and obviously help that. What we're able to offer as well, being a scheme provider, is reduced premiums and excesses available for the clients that have installed the Waterlock. Obviously, there's more information on the website, so if you need any further information, feel free to just check it all out, but otherwise I'll sort of go into the main part of the webinar. So today what we're going to be discussing is actually how to identify a non-standard property risk presented by me, Lucy Wimshurst. I've been with the business now for over 13 years, worked my way up. I'm now an associate director. My main focus is recruiting any new brokers, looking after the brokers that we already have in the relationships, and also developing any new business opportunities. I've got George on the call. For those of you that don't know, probably never spoke to me. I think Terry was looking after this before me, but I'm currently pregnant, so due to go on maternity in March. So George is on the call. He'll be obviously able to help you guys should you need anything or have any queries in my absence in March, but I'm very much here until then. So not sure if we've got agencies with a lot of you on the call, but just to give you a little bit of background on who we are, we're an MGA, we're a Lloyd's broker, we've got chartered status. As touched on, we're a BEBA scheme provider, and we specialise in the non-standard residential property insurance. We've got our own delegated underwriting authority in-house on behalf of 4 A-rated insurers. Our head offices are based in Bury St Edmunds in Suffolk, and we've also got a satellite office in Blackburn as well. For those of you that have already got agencies and a relationship with us, you may or may not be aware that we were acquired by Aston Lark in March 2021. Since been acquired by Howdens. So from a little MGA in Suffolk, we're now part of a much larger organisation. So, you know, very exciting times ahead. Not sure if any of you ever attend the BEBA conference, but we did go to the BEBA conference as well last year. We're on the Aston Lark stand, and we're actually promoting the Aston Lark schemes and facilities, which Magenta are now proud to be a part of, offering that non-standard property insurance offering. So I just want to say as well, if after the session you feel that any of you would benefit from any additional training sessions, either on any specific products or anything else related to the non-standard property insurance, please let either me or Jordan know. We'll be more than happy to help where we can. So by the end of the webinar today, hopefully you should be able to identify the following learning objectives. So understand what makes a property non-standard. You should be able to quickly identify a non-standard property quote and what is making the risk non-standard. How to explain to a client that they'll need a specialist broker as the property doesn't fit the usual criteria. They probably already know this, which is why they've come to you in the first place, but it's just to touch on it. And also as well, the risks of taking incorrect cover, both to your client and to you, the brokerage. Some of the newer members of your teams or the offices may not be aware of the implications that it can have on the brokerage. So just important to cover that element off as well. So there's a number of questions, obviously, that you as a broker needs to ask the client. Most of you are aware the client in return needs to ensure that they answer the questions correctly in order for you to determine which type of policy is needed. It will also help you identify which policy is needed. Sometimes the clients don't necessarily know what cover they need, and they're actually relying on you for the advice and the help. So as you know, the questions that you ask obviously make up the insurance contract. So if any incorrect information is given, it could lead to a policy being void or cancelled and a claim not being paid, which in turn is going to land on your desk and give you a massive headache. Many people are not aware of the potential implications of not answering the questions correctly. And also as well, the implications when a client actually misinterprets a question that's asked by the insurer. Speaking with an underwriter within the Aston Lark schemes for PI, interestingly, most PI claims coming from brokers who haven't disclosed that properties are unoccupied. It's not only ensuring the client answers the questions, it's also ensuring that you as the broker and your newer members of the team understand the questions that are being asked. As a general rule of thumb, if all of the answers on the statement of insurance or the questions that you've asked is not a yes, usually the policy is non-standard, and that's where we would kick in and a non-standard policy would be needed. Most insurers, they do have an assumptive question set, or they will ask questions such as, has the property ever flooded? Is the property listed? Is it used for business, etc.? So most of these would be, a yes or no answer. But yeah, if they're answered no, usually you're veering away from the insurer's standard question set, and this is where often it will become unacceptable. And a specialist or non-standard insurer, like I said, such as ourselves, will be needed. So the first learning objective that we'll discuss is to understand what a non-standard property is. So as we've discussed previously, most insurers have a standard or assumptive question set. When the client's answers fall outside of the standard question set, often the risk is then non-standard. So the client would more than often require a broker, as they're unable to go and just buy a suitable policy online because of the questions that they've answered. And it's only purely because the standard markets insurers, they have a set guide that's acceptable to them. So if something is a little bit unusual or normally falls outside of this scope, they don't have the capacity to insure it. So there's many factors, obviously, that would deem a property non-standard. Some of the examples that we could give would be construction. So usually it would need to be brick or stone with a slate and tiled roof. The occupancy, so usually it would need to be permanently occupied by the client and the family. Whether there's any business use, normally clerical's fine. Whether the property's been affected by flooding. And then you've got the moral aspect as well. So if anyone has any bankruptcies or criminal convictions, so any of those sort of situations would normally deem the property to be non-standard. Now, the actual policy itself doesn't usually differ with regards to the limits within the policy. And behind the scenes, the client's just purchasing an annual household policy. It would have just been underwritten by a specialist insurer, obviously taking into consideration the factors which would make the risk non-standard, such as the bankruptcy, the business use, or the non-standard construction, etc. The underwriters can then apply the correct terms and obviously price the policy correctly. So second learning objective that we'll identify is how to identify a non-standard property insurance quote. Okay, so as we've already discussed, each insurer has a specific set of questions that you need to ask, the client needs to answer. And usually if the questions are disagreed with, it would usually mean the risk becomes non-standard. So yeah, for example, just give you an example here. The question may be asked such as, it's your permanent home occupied only by you and your family as your main residence. So this would mean that the client and their family only need to reside at the property and it needs to be occupied. So if, for example, they had a lodger or they were part letting a room or part of the home, or anyone other than the family was staying there, it would need to be answered no. An example of where it may not be their permanent home would be as if it was used as a weekend home or a weekday home, or it could be unoccupied or, you know, unoccupied at inception. So if the client was to say that it was occupied or that it is their permanent home, then normally the quote would be standard, but obviously if it can't be agreed with, it would normally be non-standard. So another example on how the property would be non-standard is if the home was ever used for business. So for example, is your home ever used for business? And for those of you as well, if you're wondering what counts as business use, as a general rule of thumb, the client would need to let you guys know if they have any business visitors to the home, if they run a business from a home, or if they have any paying guests. So anything outside of that would normally be, you know, sort of okay. But yeah, if any of those would apply, it would normally be operating as a business. So yeah, hopefully there's just a couple of examples there of some of the questions that are asked by the insurers that would demonstrate what type of scenarios would make a quotation non-standard. Okay, so besides the usual questions, other ways on how you could identify as if a risk is non-standard would be to carry out a quick Google search on the client or the property. Google's an amazing tool. Most insurers use it every day. You know, we've found lots of clients with undisclosed criminal convictions, believe it or not, by carrying out a quick Google search. But a Google Earth search as well. So you've got Google and obviously you've got Google Earth. So a Google Earth search can help identify a lot of things. You know, some of the things that we as underwriters can identify is the construction. So by Google Earth search, you can get the street view. You know, you could see if it's timber, thatched, or any other non-standard construction. It will also bring up any flat roof area as well, which is often something that is undisclosed, because you can get an aerial view and you'll be able to identify then that actually there is an element of flat roofing on the property. Business use can also be found as well using Google Earth. So you can look for things such as car parks, you know, multiple cars being parked at the property, and I'm not on about 2 or 3, large outbuildings and signage. Holiday lettings can also be found as well. So again, multiple outbuildings or dwellings on the same address with different names, you know, multiple cars or car parks. All of those sorts of things would help identify that maybe the property is not as it seems. We've had ones before where there's been lorries and, you know, big sort of HGVs parked on the side, you know, or on the driveway, and it turns out like it's a builder's merchant and they're transporting heavy goods. So yeah, there's a whole host of things that Google Earth can obviously help you identify, but hopefully there's just a couple of examples of how Google can help. So the third learning objective that we'll discuss is how to explain to a client that they actually need a specialist broker. So often the clients already come to you because they're unable to purchase the correct cover online. So this part shouldn't be too difficult. But if they haven't, and let's just say you've been speaking to the client going through the quote in real time, you know, it's materializing, the risk is non-standard for whatever reason, they may not actually know that they can't just go and buy a policy online. So that's your job to help explain it. So some of the things that you could do to help explain it to the client is obviously reassure them they can still obtain insurance to, you know, despite the fact the risk doesn't fit the usual markets. Reassure them, you know, just letting them know that you have got a solution and that you'll be able to find one, and explaining why it doesn't fit the usual market as well. So just mention the question sets that we've already discussed, that they do usually have, you know, a sort of set question set. So anything that falls outside of this, they won't accept. Also as well, might just be worth your while explaining the risk of not taking the correct policy in the first place. So, you know, for example, if they do just go and buy it online and don't answer the questions correctly, what would happen in the event of a claim. And then what you need to do as well, if the client's got an alternative quote online, so via a standard market. So if you're going through the quote and they tell you that they've got a quote online via one of our competitors or via a composite, never assume it's correct, first of all. So yeah, always gather the facts. We have this quite a while where they say, well, we've got a quote with, you know, so-and-so and it's this amount. And you think, well, it can't be because you've had subsidence, or, you know, you can't be, you've got 100% flat roof. So yeah, never assume it's correct. So, you know, we always live by the rules of always gather the facts. So, you know, what we would do is Google the insurer's questions. Often we'd send them to the client as well if these are assumptive. I mean, it takes less than 5 minutes to do that. And you can also get the client as well to send a copy of the quote to you, so you can check the questions have been answered correctly. You know, putting the legwork in and going the extra mile for the client will pay off in the long run. You know, they'll feel a little bit reassured by the fact that you're trying to help them, and hopefully they'll offer some sort of loyalty towards you. You can also get the client as well, just to double check with the provider that they've got you know, all the information correct. For example, you know, are they aware of whatever element is making the risk non-standard? So it could be the, you know, they're running a business. Are they aware that actually they've got business visitors? So yeah, just a couple of situations there on how you can help explain it to the client. So that's just a quick Google search. You know, obviously making sure that the actual insurer has got all the details right, and also sending a quote to you just so you can help identify if that's wrong or right. But hopefully the client will be able to understand that, you know, it's not a valid quote. You know, the quote is not right because they have had subsidence, and hopefully they'll take the policy with you guys. So the last learning objective that we'll touch base on are the risks of taking out the incorrect cover. So that's both to you and to the client. So obviously there's several consequences, as we probably all know, of not taking out the correct cover in the first place. So, you know, if the insurer is not aware of the true risk in question, it can also lead to a massive headache for you and the client at claim stage. So some of the risks to the client not taking the correct cover would be having a claim declined, and nobody wants this. You know, this would be probably likely to land on your desk for further investigation if a claim was declined. You know, the insurers may want to see if the questions were asked or if they were answered correctly, and in turn it's just going to cause you guys more work. It could cause a claim payout being delayed while the loss adjusters are investigating the facts and the reports are being prepared and the decisions are being made. And ultimately, the clients are just going to end up chasing you to find out when the claim would be paid. They could have the policy cancelled or declared void, and then they could have to disclose that they've had a policy cancelled and declared void and a claim declined on any further applications. And again, it's just adding another layer of the non-standard element to you. So it could potentially lead to reduced options moving forward. So for the broker, it could lead to a potential PI claim being made, which would obviously result in premium increases for you guys on your PI. Some insurers as well do ask about PI claims when opening a new agency, so you need to then disclose that. It could lead to a FOS complaint, which, you know, no one wants that. They're costly, first of all, and very time consuming for the business. So we want to avoid those at all lengths. You could have the agency closed as well with the insurer. So depending on the severity of the case, they may not wish for you to have an access to the agency anymore. And if that happens, you then have to disclose that you've had an agency cancelled. So it's a bit of a domino effect. And then there's reputational damage for you. Obviously, bad press. With the use of social media nowadays, it could be a bad backlash on social media. And again, none of you want that, you know, that reputational damage. So yeah, that's basically you know, some of the reasons that the or the implications, sorry, for both yourself and the client. So, you know, just take away really, if the questions aren't answered a yes, you know, to what you're asking them, usually it's non-standard. You know, and if you're ever unsure, always discuss with the insurer that you're looking to place the risk with for guidance. We've got, you know, the question sets is the first port, and then you've got the use of sort of Google Earth, etc. as well. So just wanted to sort of do a couple of case studies, really, just to sort of give you an example of how, you know, we've sort of been faced with a few non-standard cases where clients and brokers haven't necessarily understood the risk is non-standard. So a broker's come to us at Magenta. They've actually requested a quote for a client who from April to September each year, he was letting out 3 rooms as a bed and breakfast for walkers that were walking the West Highland Way. Each room could accommodate 2 people, meaning the client could have a maximum of 6 guests at any one time. The client was booked for 5 to 7 days each week throughout this period. So he was charging the guests, and obviously it was operating as a business. So as we previously discussed under Learning Objective 2, business should usually be business visitors to the home, running a business from the home, or if they have paying guests. So in this case, the client has got paying guests, so it would be classed as business use to the insurer. So we basically offered a quote to the broker. This is what we do. This is the non-standard. So we offered a quote. After we offered the quote, the client went back to the broker stating that they'd received a quotation online via a competitor for a premium which was about £280 cheaper. So first of all, it was an instant red flag because it was so much cheaper. Not saying that we're the cheapest on every single one. However, you know, what I am saying is that when something's often that cheap, something's not right. So yeah, basically the premium itself was an instant red flag. And also as well the market that they'd actually approached when we asked the broker, it was actually a standard household market. So what did we do? So obviously we needed to help the broker. We needed to help the broker gather the facts to actually explain it to the client that the quote wasn't valid. So what did we do? We basically went online to the alternative provider's website to gather the facts. So we went and found the assumptive questions online. We copied and pasted these. We sent them to the broker. And then we basically just pointed out that the quote had been based on the following assumptive questions, and neither of them had been answered correctly. So the questions that were actually being asked by our competitor, one of them was, is it your main residence that's permanently occupied by you and your family and isn't left unoccupied for 60 days in a row? So obviously this wasn't the case, as the client clearly had lodgers. It wasn't his family only, and these were unrelated to the client. So that was the first question that hadn't been answered right. And the second question that was being asked was, isn't used for business purposes other than paperwork, telephone calls, child minding, and computer work. Again, it was used for business and the client was charging guests for staying at the property. So we obviously highlighted this, and that was basically the reason, you know, that the premium was so much cheaper, as the cover wasn't correct. It was just a standard household policy. So, you know, we were able to help by obviously offering the client an annual household policy, which was correct under Magenta special risk, and it obviously covered the main home, the client's contents, and any liability for any guests. And basically it was all because we could help explain to the broker why the client needed to take the policy and not the alternative. So that was a bit of a win-win situation. The second quotation that we had, or scenario that we've got, is for a holiday home. So a broker's come to us, they've requested a quote, and on face value it appeared to be just a standard holiday home quotation. They'd used our portal, they'd input the information, and the only reason that it had referred was because the rebuild was 1.5 million. But apart from that, there was nothing untoward on the presentation. So it just looked like a high value holiday home quote, which was obviously nice and simple, nice and easy. As the rebuild seemed quite high, though, we obviously just wanted to check the property and just make sure it was what it was. So we did a quick Google search. And interestingly, we found out quite a few bits of information. So we found out the risk was actually grade 2 star listed. First website that we went on, it brought up a link to the property. And it was actually an old converted church with some of the original features. And also as well, it was non-standard construction, so it was red sandstone. So there was 3 elements there that were sort of making it non-standard: the listing, the church, and the construction. So, you know, by carrying out a really quick Google search, we could really quickly identify the risk was actually a non-standard due to those 3 factors. As it was grade 2 listed as well, grade 2 star listed, we needed a report just confirming the rebuild, which we managed to obtain from the broker. The report that we received was actually 2 years old, so the rebuild was obviously 2 years old. So the client could have also been faced with underinsurance. You know, the rebuild itself needed to be, you know, just over 1.7 million. As you are probably all aware, it's quite rife in the industry at the moment. So yeah, so they could have been faced with underinsurance as well. So, you know, had we have not undertaken the checks mentioned, the risk could have been written as a standard risk. The client would have been significantly underinsured, and obviously that would have then posed the risk to us and to you as the broker. So yeah, it's just to highlight how a sort of simple search like that can obviously you know, prevent you guys from being at risk as well as ourselves. But you know, these are just some of the risks that are you know, are obviously presented to you guys on a daily basis. So hopefully you know, you found it all useful. I just want to recap on the webinar today and the learning objectives that we've touched base on. So hopefully you should now be able to identify and understand what non-standard property insurance is, and sort of how the questions can kind of help you guide that process. Obviously how to help identify a non-standard property quote by using the tools that we've explained on, and obviously how to explain to a client that they need a specialist broker, and then also as well the risks of not having the correct cover to you and the broker, to you and the client, sorry. We've also provided as well an example learning statement for your CPD logs if any of you wanted to use it below. But yeah, hopefully you found it useful. You've got a better understanding now on non-standard property insurance moving forward at a high limit. Are there any questions?
If there isn't any questions, I will obviously share Lucy's details afterwards as well. And
of course,
contact Lucy, you can go directly to Lucy afterwards as well.
Yeah, of course, that's absolutely fine.
No, but thank you very much. That was really useful.
That's all right. No worries.
I've got the recording, and we'll put it up on Buddy as well, and I'll share this. If you can send it over to me as well, I'll send it out to all the brokers so they can have a copy of it if they want as well.
Brilliant, lovely. Thanks, guys.
Thank you so much, Lucy, as well.
Thank you.
Thanks. Bye.
See you later.
Thank you.
Bye.
Thank you very much. Goodbye.